Hey guys, welcome back. In today's video, we are talking about Wall Street buying, AMC clearing all debts, the 100% squeeze chance, and many more in this video. First, we're taking a look at this. So box office rebound this year was amazing for Cinemark with an upgraded forecast, but not for the biggest theater chain on earth with millions of investors worldwide. So when you take a look at Cinemark, the forecast for it is that it's got another upgrade. You can see Cinemark gets Wall Street upgrade on forecast for box office rebound this year. Now, we already know that the box office for 2025 has been brilliant. We also know that going into 2026 is only going to get bigger. And so with understanding this, we knew that any companies, any firms within this industry are obviously going to do well. And we're seeing this evidently as we see Cinemark get an upgrade. However, the one thing we don't see is AMC getting that upgrade. So why are they being silent about this? Why are they not giving us the upgrade? We already know it's because they don't want attention on AMC, because they want to secretly buy AMC. You can see AMC is going bankrupt. That's why you have institutions reporting a new position on Jan 16 of 175,000 shares. So you're seeing all of these articles talking about how well the box office is doing, talking about you should look at Cinemark, you should look at IMAX. And then you see all of these articles telling you that, don't buy AMC, sell your AMC shares, stay away from AMC, etc., etc. And with all of this, what we are then looking at is how all of these firms are buying into AMC. This is just one particular firm. This isn't even a big amount of shares in comparison to some of the ones we've shown recently. UBS buying over 23 million, institutional ownership at an all-time high. All of these things are happening whilst they're giving upgrades on firms like Cinemark, IMAX, but not AMC. And I think this contrast should already tell you a lot about what's actually going on, about how these firms view the opportunity there is for AMC, and more importantly, how they want to benefit from this opportunity on their own. They want institutions to win and not the retail, is why you see these upgrades on Cinemark and not on AMC, despite the fact they are constantly buying AMC. Now, another reason why they want to do this is because if these institutions are buying AMC, they are able to then control the price. They are able to not let the price go up higher until all retail leaves, because we have already talked about how there is no way that the retail has been buying AMC shares for so long and the price doesn't go up. And that's the reason for that is because of manipulation. And the big reason for why they're trying to restrict the price of AMC is because of this. It's worthwhile to note that at a considerable price increase, restrictions associated with the restricted period are exempted according to the July 25 8K. For example, if AMC reached $100, it could immediately make an offer of 40 million shares and clear all debt. And this is a very important clause that was in this filing. The reason for this is because we know that AMC can go to $100. We know that easily AMC can go into the hundreds of dollars of share price. This is something that we have always talked about. Because when you look at the fundamentals, then you look at the sentiment, the FOMO, and everything else that's included, you know that AMC can go into the hundreds. And this isn't even including a squeeze. This is just talking about if we are able to have a month, and probably even less than that, of no suppression, no manipulation, market makers not internalizing AMC trades, market makers not using 80% dark pool. We aren't seeing the AMC swaps going crazy. We aren't seeing the AMC FTDs getting reset. We aren't seeing the AMC tokens going crazy. If we are able just to see normal price movement, normal price reaction for AMC and see the price discovery, we know that it can go to the hundreds when you include all of those factors in. And that's why they are afraid, because they know that right now, the only thing these guys can cling on, these guys can use to talk bad about AMC is of AMC's debt. Now, we've already talked about how, yes, AMC does have a debt, but we're seeing how they are tackling this. We're seeing how they're slowly paying this off. But of course, there are some people who just refuses to see that, refuses to understand and try and acknowledge it for themselves. But they also know is that if AMC were to fully pay off the debt, shorts won't have anything to say about AMC. And that's why they are afraid to let AMC price go up. And that's why they are secretly buying AMC, because firstly, they are able to get AMC's shares at cheap value. But then secondly, is that institutions are trying to buy it up as much as possible without letting retail get their hands on this, because it prevents the price from going up. And so until institutional ownership becomes 100%, which we talked about how that's impossible, but until that time comes, these guys will continuously suppress and manipulate AMC. We've talked about this. There's only two ways for institutions to ever get out of this mess. One, for AMC to go bankrupt and get unlisted. Two, for every single retail, or at least a big majority, we're talking over 90-95% of retail, to leave AMC. That's the only time they are able to get out of this whole mess they've made from themselves. And that's why they're trying to prolong this. But we apes obviously have the patience. And then secondly, you're also seeing this 100 million shares short, where we talked about this recently. When you take a look at the short interest and the short shares for AMC, you're starting to see it increase drastically again. And this is at a time where we're seeing volatility kicking in for AMC. Today, we're up 2.84%. But of course, what we've known is that we should obviously be higher than this. Yesterday, we saw AMC up over 7%, but then it was suppressed. Today, the same thing as well. You can see at around the same area as well, pretty much. And, you know, this is what we're looking at with how they're suppressing AMC. But when you see these obvious suppressions, you start to understand what's going on. And we apes have known this for a long time, but we talked about the desperation, about why these shorts feel the need to obviously stop in terms of stopping AMC from going up. We've already talked about it, how they want to prevent AMC from raising as much money as possible. Now, in times like this, we have to see the cost to borrow. We have to, pay attention to whether or not the cost to borrow is going to rise. Because with short term, with prices holding low at these levels, if you do see that, you can imagine shorts will rather have higher exposure than allow AMC to raise capital at fair value. And so you can see how a lot of things are tied up, because they know how powerful AMC will be. They know that if AMC were able to raise hundreds of millions of dollars, or even billions of dollars, then that will put them at a position where these short sellers won't be able to do anything. We talked about paying off debt, but even if AMC weren't able to pay off all 100% of debt, if they were able to pay a portion of it and then put the rest into investments, whether that's stock investments into other businesses or whether that's into their infrastructures, that will all allow AMC to grow. And that's why we're seeing this. And a big thing about having higher exposure is that they will face even more liquidity problems. When taking a look at the technicals for this, you can see 100% squeeze chances are coming. GME is going up already like past squeezes. AMC is a complete setup to squeeze, where we're seeing essentially how AMC is looking similar to past data for why the price is going up. Now, we've talked about the call options in terms of the gamma squeeze. And so that's something to obviously consider in mind as well. But then we also talked about the investment into silver right now, how that affects AMC and the market, because we talked about how, firstly, HYMC is a very good return on investment for AMC already. But secondly, it's about how these banks and institutions have been shorting silver. And so as we see AMC get bigger and richer of silver prices going up, we're looking at banks and short sellers to actually get losing money as silver prices go up. And so that's why we're looking at the squeeze setups becoming more and more similar. Now, there's another showcase of GME going up as well. Another reason for why we say we're putting on the stress for these short sellers. Now, Ryan Cohen bought another 1 million shares this week and called out other CEOs who don't buy shares with their own money. And so this is something that we are obviously looking at. Now, in terms of confidence, I think that this is obviously a big and certain bullish confidence. And so this is something why I do think that GME is going up, but it also showcases about why we've said that CEO, like Ryan Cohen, wants to bring GME to a new level, just like Adam Aaron wants to do with AMC as well. And so this is something that's obviously good to see. And then at times like this, where we're seeing the sentiment for GME to become extremely bullish, we're seeing XRT and GMEU, which were 100% borrowed. And this is what we see. Every time GME sees any momentum, the same applies for AMC, we're seeing these ETFs being borrowed to the max. The very ETFs that can be used to suppress AMC. And you start to see these data happening over and over again, but then you will obviously understand the reason for why this is happening. Another big thing that I want to mention is anyone else that see that GME is closing a record number of stores in January 26, up to 500, and at the same time, is showing up in a digital collab with AMC. So firstly, I don't think everyone should panic about closing of stores. Now, we have to realize that AMC did this thing last year as well, and it actually worked out very well for them. There's always strategic things to closing out these stores. Now, there are, of course, pros and cons when it comes to this. The pros are, of course, is that when you're closing out the less efficient stores, you're able to save money, which then in turn, you're able to then make more money. The second thing is talking about the digital collab with AMC, like you guys can see here. Now, I do think that if this is something that becomes big, or at least what I've seen from it, and I'm curious to hear what other people have seen, or what you know about this, but this would be something that would obviously be extremely strong for the apes, because AMC and GME have the same short sellers. This is something we already know, and if we are able to work together and combat against these shorts, that would put us in a better position. That will give us more leverage against these short sellers. One of the things we talked about in the past is obviously where people will sell their share price. In this case, for this particular user, I won't sell a single share under $5,000, which is obviously $500 pre-split. And so once again, we're just talking about how people are, wanting to sell their shares at certain prices. And we talked about this is the reason for why these short sellers are panicking. And this is obviously a good thing. And I'm not trying to say that this is a bad thing, because this is what we deserve. We seeing how AMC can do this. We deserve this for the countless times we've been here. And so shorts know that as well. And that's why they are afraid to let the AMC price go up. That's why we see the constant suppression. But we know that at one point they won't be able to suppress it anymore, and they will have to pay us for the price that we want. And that's why we're consistently watching out for the problems. We're consistently applying pressure towards these short sellers. Another big thing, HYMC. It has 105% of the float shorted. Now, we've seen how HYMC has performed recently, and today it was actually up another 15%, which is obviously very good, and made a new high. And what we are seeing is, or at least a recent high, and what we are seeing is just essentially the fact that every time there's something that benefits AMC, we see that thing get suppressed, because HYMC having 105% of the float shorted, if it does go down in price, what are some of the people that are going to get affected? Firstly, apes. We know that there are a lot of apes backing HYMC. Second will be AMC themselves. And so this is why they're trying to attack HYMC. But ultimately, I don't think it's going to work out well for them. Purely, we're not even talking about all of these other reasons. We're not even going to talk about just in terms of the fact that people realize people are buying, people are holding on to HYMC. But the very fact that Highcraft themselves has talked about silver prices surging past $100, going as high as $165. And if this were to happen, HYMC will be one of the biggest benefactors from this. And just the market alone right now is showing why HYMC will go up, tenfold and even higher. And so that's something that we obviously have to realize. We can already see silver sourced a record high over $96. There's another reason for why I believe that, yes, they can try and short HYMC, even if we didn't have the millions of apes that are backing it, even if we didn't have the fact, in terms of what we talked about in the past, just the very fact that we are seeing silver on this run is already going to bring it up, let alone that the investors are not selling, that the investors are continuously buying and accumulating. This is another power factor towards HYMC's price. We're also seeing the same for gold as well. Just another factor added on to why I believe HYMC is going to go even higher. We're only 2% away from a $5,000 target. And so this is something that's getting extremely crazy. And what we are looking at is how all of these short sellers are getting burnt out from these prices. They're getting burnt out from gold. They're getting burnt out from silver. They're getting burnt out from shorting HYMC. And we are seeing everything crumble, everything falling. And that's something that we want to see, because that's how we know we are beating these short sellers. Now, last time we talked about the tokenization. We talked about the on-chain exchange. And I highly recommend you guys to take a look at this for yourself. This will be in the description. But we talked about it in terms of why it's a double-edged sword, and we talked about the pros, we talked about the cons, and here you can understand again why we talked about that there are the cons that exist for this. And one of the things you can link it to is, of course, have FTX, how they had 0 actual shares of many companies that they issued billions of token for, which we know that they did the same for AMC, and it's why we knew why we saw AMC price getting affected. And so this is something that obviously pay attention to. Another big thing, how trustworthy is the nominal price on the trader's screen and used to calculate benchmark yield when $280 million of trading are enough to trigger a 6 increment move of, in theory, a multi-trillion-dollar government bond market, where we talk about Japan bond wipeout was triggered by just 280 million of trading. And so already you start to see how shaky the market is. And for those of you who've been watching my videos for a long time, you know that the reason why we focus on bonds is because of the fact that this could easily affect the American market. This could easily wipe out trillions of dollars of collaterals, allowing AMC to go up. As always, now this is financial advice, so do take our Instagram salt. Make sure to do your own due diligence and research, and I'll catch you guys next time.